With another $200 billion worth of tariffs being proposed, we have major indexes that are shrugging off the news and breaking out to all-time highs. Tune into the rest of our video to find out which major indexes are continuing to thrive amongst all the trade war noise.
Most of the major U.S. indices were positive last week, with the Dow Jones leading the way, up over 2%. The NASDAQ is now up over 13% for the year and just made new all-time highs. And also, the S&P 500 is up now almost 5% year to date and is at its highest point since the beginning of February. Foreign stocks and emerging market stocks were both positive also this week, with foreign stocks down for the year about 2%, and emerging markets still down over 5% year to date. As I mentioned previously, emerging markets has been a laggard for most of the year. But the chart that we have in front of us today is of the India index, and India is part of the emerging markets, but unlike the emerging markets, India has been bucking the trend and having a very solid year. If you look at the chart in front of you, you can see the blue box to the top, and what we're looking for is India to continue its strong year and break up above the top blue line of that box, which is around 11,150. If we see this India index continue to perform and potentially break out to all-time highs, that could bode well for emerging markets for the rest of the year.
Last week's news kicked off with President Trump proposing an additional $200 billion worth of tariffs on Chinese imports. Now, this tariff that's being proposed is different than the one that just kicked in because this is a 10% tariff on a variety of goods. This new proposal isn't scheduled to be voted on until the end of August, so for right now we feel that this is just a negotiation tactic. In the meantime, China has filed a complaint with the World Trade Organization over the new $200 billion proposal. Oil re-entered the news last week, with Saudi Arabia coming out saying that they're going to start increasing oil production, which caused a sharp decline of almost 4% in the index last week. And wrapping up the news from last week, retail sales numbers were revised, and we've now officially seen 5 straight months where retail sales have increased. This shows that consumer spending is still on the rise and the underlying fundamentals of the economy still remain strong. So this week we have some major companies reporting their second quarter earnings. And with expectations being so high, any slip up in numbers could be a cause for concern with the markets going forward.
If these companies do beat their expectations as anticipated, along with the strong fundamentals in the economy, we could see a good push in the markets for the rest of the year.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share our video. Thanks a lot, and we'll talk to you guys next week.
Money.